Well, the markets have gone parabolic. Hi, Dean Jenkins with FollowMeTrades.com, and this is the update for the week of coming up of January 29, 2018. And parabolic simply means that the angle of ascent has changed. So if we draw a trend line from here to say here, that's kind of the trend that the market all through 2017 followed. You can see that blue line here. And then as 2018 started, here's the new line, and it goes from here to here. And you can see that the trend line, the angle, has dramatically increased. And that's the definition of a parabolic market. Now, it may continue. Who knows? It's impressive, and there's a lot of good news out there from a lot of fronts economically. But I'll draw this line so you can kind of see the intersection there and the change of the angle. It's dramatic. It doesn't continue forever. May for a while. Who knows? But there's I say a tsunami of information coming out this upcoming week that may accelerate this, and maybe it will take another angle up, or it could disrupt it. So we got the President's State of the Union address coming out on Tuesday the 30th. On Wednesday, the morning of the 31st, late in the morning, about 11 o'clock Eastern Time, FOMC, in their last meeting under Janet Yellen, will announce their latest take on the U.S. economy and what they're going to do about rates. So increasing rates could have a big impact on many sectors in the markets. After the big run-up, you could have large institutional investors and others deciding to take their profit and move it over to fixed income with better rates, or no action may spur further investment in equities. You can speculate all day long. Ultimately, we have to trade the realities of what actually happens. And then we have earnings season in full swing, and lots of very big names, very big, influential names like Apple, Facebook, Amazon, Alphabet, all releasing their latest results on Wednesday and Thursday. So all that information coming in is probably going to cause some volatility in the market. So how do you deal with volatility in the market? It's the same way you deal with really any market. You only take the absolute best trade setups. You got to have a set of trading rules. You got to follow them with iron discipline. You got to use risk control. So if trades lose, which many do, some do anyway, they're small. You got to keep your winners big in relationship to your losers, right? As long as you win more trades than you lose, and the winners are bigger than the losers, you're going to be a profitable trader. The only variable in that equation is how profitable. So with known volatility coming up, like big announcements from the Fed, which could affect many things like gold and bond ETFs, and with earnings on big companies, we're working on a pretty interesting strategy of taking strangle option positions around major things, again, like gold and bond ETFs and individual companies as they announce earnings. And it's been pretty fun, and we've gotten some really good results, and we're doing that in the live trading room. If you'd like to come check that out as these events play out, and potentially get into some nice low risk, high potential winning trades, check it out. There's a link, and you can be with us this week. Hope to see you there. But otherwise, I look forward to your questions, your comment, and post them on the page here, and it's going to be a super interesting week. Whatever you do, be safe. Trade careful, use risk control, and again, keep your winners big, your losers small. Thanks.